my sense is that Bank of America has had a major, major correction already. And could there be another down leg? Absolutely. Do I think there'll be a pop to around $12, $12.20 first? That's what my sense is based on the chart work, that there's a rally coming first. So if you think that you want to be short Bank of America or long some inverted ETF, inverted XLF, my sense is that there'll be a higher price to do that. So today, the Bank of America, let me see if what's the weekly, here's the hourly Bank of America. So to me, this is the first leg up of a correction that has another up leg. And just for argument's sake, if there's some sort of swing move, let's see, 11.70, 70 cents, and the pullback, if you tack on 70 cents to 11.35, you get 12.05, 12.10. So roughly, if there's a reason to rally, this is where I think Bank of America could go. And then if you want to short it, then fine. You know, the larger picture of Bank of America is still in a massive downtrend. And the only thing that's going to make Bank of America bullish and where it will get traction if you choose through this area between $13, which is right here, and $14. So if somehow something happened and it was able to do that, then Bank of America is off to the races. But right now, I think if it gets to around $12 in another up leg in the market reaction to whatever the Tuesday, Wednesday events or Friday's employment report, then I think that against this channel line, which towards the end of the week is, well, that's 12.90. There's no way I think it's getting there, but I think 12 to 12.20 would be a reasonable target. Let's just see what JP Morgan looks like while we're at it. Just get rid of some lines. So now JP Morgan, that this chart doesn't do it for me from the long side. I realize that as long as JP Morgan holds around 36, it's okay. But the fact that it had a chance to break out up here, to really chew into this resistance of 41 to 42 and failed, suggests to me that this consolidation is going to fail. Now, maybe along with a positive reaction, and like I said, Bank of America going up to $12, maybe JP Morgan can attack this trend line again. It goes from the April high. And if that happens, it could get, let's say, to 39.30. It closed to 37.42, which is asking a lot. But let's say it got into that area. Then I think, it's going to come back down, and JP Morgan will end up having to fight to survive at this area. 36, 35.62, 35.16. If it breaks here, it will really have a problem. And one more, Wells Fargo. Actually, Wells Fargo doesn't look so bad. It has what arguably can be considered some sort of double low here in the 23 and a quarter, 22.90 area. But to get any traction, it needs to take out this resistance. For the most part, I would say this. If Wells Fargo had a reason or a way to close above or to accelerate through 26.50, and I think something's going on there. It looks a lot better than JP Morgan, that's for sure, and it looks better than Bank of America. And then one more, Citi, while we're at it. Citi was my favorite, and it still has a pattern that looks to me as though has upside has upside potential into this 470, 475 area. From a weekly perspective, you see what we have here. We have a series of lower highs, a series of higher lows. And the next coordinate would be around that 470. That would imply that the city would be able to hurdle this 430, 432 area where it peaked last time and go to 470. If it somehow took out this trend line on a weekly basis, that would be very positive. For whatever reason, there would be a target of close to $6 thereafter. So city actually looks pretty good still. I don't know why that is. I'm not sure what the deal is with government getting out of city and how much it has already, how much it has left, and all that. But in spite of it all, notice all the moving averages are underneath city rising, which is different than the other banks. So I keep an eye on city. I think 470 and then possibly $6 is a possibility up the road.